Hey guys, after a long time, I'm back with a new video related to the stock market. So these days I was busy because with other work, also I had to attend the college classes. So I was not able to make the videos. But now on, I'll promise you that I'll be regular with my videos. So without any further ado, let's begin this particular session where you can learn more things about the stock market. Today, one thing I'd like to tell you is that every year two times there will be Nifty rebalancing. This Nifty 50 stocks over there every year two times. In the month of July and second time in the month of January there will be a rebalancing. The worst performing stocks or the stocks whose financial rating is not good, or the stock which is not performing well since many years, those stocks will be removed, and the new emerging stocks which is present in the Nifty Next 50 will be added to the Nifty 50. And this tradition is being followed once in 2 years. Twice in a year. So, at the same time, in July 31st, there's going to be a Nifty rebalancing, and it is suggested, or it is predicted, that these two stocks are likely to enter the Nifty 50. Okay, let us discuss about the stocks, and also, if you want to know more about stocks, this is the right platform. I'm going to discuss it right now. Where about what we are trying up to, and which stock is better than what, and what is their business, etc. So, okay, first stock which is I'm going to talk about, and which is accepted, or which is thought that this stock might enter the Nifty 50, replacing the Indian oil, is InfoEdge. InfoEdge is all. If is Many people might not know about InfoEdge directly. Okay, wait, InfoEdge. But if you tell people about the stock name Naukri, then many people will get to know. That is because now we all know about Naukri, right? The place where we can get the jobs, where you upload your resumes, the employees or the HRs, they contact you, and then the process of hiring happens. And at the same time, this InfoEdge is into other business like Policy Bazaar. You have come across many ads like Policy Bazaar, right? And 99acres.com. Now it is not much popular, okay, because I'm not sure why, because I'm not able to see much ads on the entertainment channels. Might be because they think that they have done enough publicity for their product, so now they must focus on the profitability. That might be the reason. Okay, but one thing I'd like to tell you is this company, the valuation which can be done by this company is, sorry, I was wrong. Correct valuations for this company cannot be predicted because it is an internet company and there is no competitor for this. For example, a right way or a common way where the people or the investors or the analysts do analysis of this company, and do the valuations of this company, and check whether this share price is overvalued, or check whether this company is overvalued or undervalued, is mainly by looking at its business model and its competitor. Okay, to understand the business model, this business model is new. I mean, this the main business model of this company is, it is going to take money from the shareholders, or through other sources, and it is going to invest in the new startups, and out of which, consider the we know some statistics that 99% of the startups fail within the 3 or 4 year period. Okay, so they are going to invest it equally. So even if 1 out of 10 startups succeeds, then it is going to make them a fortune. For example, Zomato, Naukri has some 15 to 60% invested in Zomato. And what is the valuation of Zomato? It's again $2 billion. So 15% of $2 billion, $300 million. In the same way, it has invested in other startups also, like Policy Bazaar and 99 Acres, Naukri, etc. So, and there is no competitor for this company, so it is very hard to predict the valuations of this company. Only thing what we can do is to wait for some years and then look at the futures, because if you are an internet company, your expenses will be very high in the beginning for some years, and after some years it is going to be a constant one. Your expenses does not increase, or it might be the same, but your profitability, it increases exponentially. So that is the case with this info edge company. And Naukri, and people are saying that this stock is going to, what do you say, give the return, or it is a likely addition. And the reason we can see this jump yesterday, okay, it had given a jump of probably around 8% yesterday itself. So this might be a sign where the investors or the analyst might have already predicted that this, out of these two stocks, one stock will enter Nifty 50, for your information. Okay, so this analyst might have predicted that this stocks is going to enter Nifty 50. So probably the investors are investing it now so that they can take the early advantages of investing in the stock. Okay, and when we come to the long term performance of the stock has given 3000% of wonderful return over 14-year period. So this is a multi-bagger stock, and it's an internet company, but the valuations of this stock is pretty high. It is trading at 48% valuation, and the market cap is 68,000 crores. It is a large cap company. Okay, there's also a possibility of another stock which might be added into this Nifty 50 possible addition, which is DMart. Yeah, this DMart, we all know it is owned by Radhakishan Damani, one of the popular investors. And one of the popular business model of this DMart is that they don't rent a property. If they want to open up a new stall in a city, they directly go and purchase the property. So it is going to be a one-time investment for them. So every year they need not pay the rent, and with years, as the expenses increases with the inflation, the owners might increase the rent also. So there's going to be an increased expenses over a period of time. So instead of that, they directly buy those plots in those cities and they are going to invest in it. Okay, now, but one of the major backdrop of the stock Avenue Supermarts, the DMart not entering the Nifty 50, it might be a possible reason, is that this stock is not yet listed in futures and options. But so there is a rule for Nifty 50 stocks that each and every Nifty 50 stock must be listed in the futures and options as well before it is going to be a part of Nifty 50. So this stock is yet to be listed in the Nifty 50. So we must wait by the end of this month. If this stock is listed in the Nifty 50, then we can directly tell that the stock is going to make its way to the Nifty 50. So let us wait and watch. But other than that, the stock has also given a wonderful return for its shareholders, and the stock was listed in 2017, and from 2017 it has given wonderful return of 400%. And 400%. Okay, at the same time, if you had invested this the same money in a bank FD, you would have got 40% return. Now you are going to receive 400% return, which is wonderful according to me. So what we are trying to say here is both stocks are good, and if you're going to invest in both of the stocks, then there's going to be 50% probability that one stock will enter Nifty 50. But if that stock doesn't enter the Nifty 50, doesn't mean that the stock is bad. Okay, so if now it is giving a good competition, well, if one stock is not entered during the July 31st period, the same particular stock might enter Nifty 50 or might give a good competition to enter the Nifty 50 in the January 2022 period. So let us wait for it. If you invest in both of the stocks, it is not an issue, and both of them will give good investments to the shareholders. But one of the major backdrop of the DMart is that the competition is pretty high, and these days most of the consumer products or FMCG or these sector companies are shifting it to online. We all know the major players in the online market. This Amazon and Flipkart is already there. Along with that, JioMart is also entered into the retail space, and JioMart has started its online business, and it also has online wings as well through this AGO textiles, etc. Now it is best time for this DMart to focus on the online business and start investing heavily in that sector as well, so that it can help them to sustain the business in the future. Because we all know in the future things will be virtual everywhere. Things might not be the same as it is now. Probably because of COVID-19, we are doing everything virtual. We are ordering online. But once we are used to this online delivery, etc., people are finding it easier. So they will continue this. So these kinds will repeat. For example, look at Zomato. There was no system of, in fact, there was very less tradition of online food delivery before Zomato entered. I mean, if you call the hotel nearby, if the hotel had this catering services, then it was offering you a service, then it was a good option. There was a online food delivery system. But after Zomato, this Zomato entirely changed this cycle. Nowadays, even common people, even the people, even college students or even simple middle class student people are ordering the food through Zomato, just because they can save a bit of time, because nobody wants to commute in Bangalore traffic or the Indian traffic and eat it over there. So at the comfort of their home, they can enjoy the essence of food along with binge watching a movie. So at now, the people are used to Zomato. That is the fourth cycle of a startup. It is called as irreversibility. Okay, so the same thing is being followed by these online platforms. Due to COVID-19, people started buying this online, buying out more online things. Big Basket was sold to Tata at $1 billion valuation. Just an online vegetable delivery company at $1 billion valuation. Can you imagine that? At the same time, it has invested in the NetMeds as well and Farm Easy as well. At the same way, so what we can say, that is, if this DMart focuses more on this online segment in the future, then we can expect a good return or good discounting by its investors. Other than that, if the company is determined, or the company is very, if the company is means willing to focus only on its offline business, well, there might be a good return, because people would love to shop, love to go and look around the products. But they might not be a good competitor, because Tata is also developing a super app which can be a competitor into its consumer business. So let us wait and watch. We can say DMart is the Walmart of India. And even Radhakishan Damani once in an interview said that before even starting the business DMart, he went to America and studied about the Walmart and other companies similar to this sector for a period of 1 year, and then he understood this business cycle as a whole, then came back to India and invested in it. So we can say this as a Walmart of India, and Walmart doesn't have a good presence in India. So DMart is the Walmart of India. Yeah, this all. And if you invest in both of these stocks, I think they'll give you wonderful returns in the future. So this is all I wanted to say, guys. Thank you. Jai Hind. Goodbye.